Are you wondering what's happening with interest rates this fall and how it could impact you in the real estate market in Southern California? This September 2025, the Fed meeting is getting a major attention, and there's a strong, nearly 100% chance we'll see a rate cut. That's on the 17th of this month. Today, we're diving into what that actually means, how it may affect mortgage rates, and what this could signal for buyers and sellers. Let's break it down. Let's start with the question everyone's asking. Will the Fed cut the rates this month? And by how much? According to CME Group, one of the trusted financial market platforms, there's currently an 88.4% probability that the Fed cuts the interest rates by 25 basis points at their upcoming September 17th meeting. Even more telling, institution investors and bond markets have now priced it at 100% chance of a rate cut. There's also mild speculation of a deeper, maybe a 50 basis point cut, and that scenario is unlikely unless we see major drop in inflation and employment data before the meeting. This is one of the most anticipated Fed decisions of 2025, and the ripple effects could be felt across lending, housing, and consumer sentiment. So let's clarify what a Fed Reserve cut actually means, because it's often misunderstood in the financial circle. When the Fed lowers the federal funds rate, they're actually lowering the money at which banks lend to each other overnight. It's designed to stimulate borrowing and economic activity. Lower rates encourage banks to lend, consumers to spend, and businesses to, in turn, invest. This change affects short-term lending products like credit cards, HELOCs, but also sets the tone for longer-term financial markets, including bonds and real estate financing. Bottom line is it's a signal the Fed believes inflation is under control and that the economy may need a slight boost heading into the final quarter of 2025. Now let's get what most homeowners and buyers care about. How does a Fed rate cut actually impact mortgage interest rates? Here's the nuance. While mortgage rates aren't directly controlled by the Fed, they are heavily influenced by the Fed's policy and their decisions. Mortgage rates tend to follow the 10-year Treasury yield, which moves based on investor citations about the economy, about inflation, and yes, what the Fed moves. So when the Feds do cut rates, mortgage rates often trend downward as well, though not always immediately. For home buyers, this can mean more affordability, lower monthly payments, and an opportunity to gain more purchasing power. And for sellers, it could mean increased buyer demand, especially in higher price points where interest rates play a bigger role in the loan qualification. So how should you interpret this September rate news if you're thinking about buying, selling, or exchanging your property in today's market? This is where having the right strategy becomes critical. If you're a buyer, locking in ahead of potential demand surges, it could give you an edge. If you're a seller, timing the market while buyer confidence is high, it can help maximize exposure and price. And if you're a property owner thinking about a 1031 exchange, a cash refi, or portfolio adjustment, these rate shifts may open the door for more favorable terms for you. Having someone on your side like myself who understands both the economic indicators and the real estate landscape gives you an advantage most buyers and sellers overlook. With 22 years of real estate experience, we provide our clients with the knowledge, information that truly affects them. This insight, combined with our personalized service and expertise in negotiations, is what helps our clients succeed in any market. If you want to know how this upcoming rate change could affect your buying and selling or exchanging decisions, let's have a talk about your specific situation. Give me a call, and if you found this helpful, feel free to share it with someone you know who might benefit from it. We'll see you in the next video.